August 7th, 2020. This is a video log that takes 30,000 to a million. I'm going to keep this short and sweet. There was some questions that pertain to taxing on Robinhood, and I want to kind of answer those for you guys today. And the question is like, what would my account look like? How much tax would I have to pay if I were to liquidate my account? I believe is the question. But it's very complicated. It's not that simple. So let me just really quickly run through the account. I'm going to go very fast in this video, make it short and sweet. So, oops, this is the wrong tab. This is the real tab. I'm sitting at, I was sitting at 114,000, but that obviously changed. If you want to know about my positions in the account, you can always read the symbol here. Pause the video at any moment if you want to read the position. All the information is right here. You have Wells Fargo, $24 put. You can see the symbol, the price, whether it's a put or a call. This is the date, and then whether it's a sell or a buy, and the number of contracts here. So you can pause at any time. It's been a pretty, volatile session. A lot of things are up, a lot of things are down. Apple has been carrying the day, and it's probably going to correct a little bit tomorrow, meaning today. You're probably watching this on a Friday. So these are all the positions here. And now we're going to go into the tax situation. So since my account is 113,000, you would think that I have to pay a lot of tax on it, but that's not actually the case. So let's run through it real quick. So this is the long-term capital gains tax. So what is that? Well, long-term capital gains tax is something that you hold more than a year. So the way you get paid on that, the way you pay tax on that is for every up to $40,000 that you sell for something that you hold for more than a year, then you don't pay tax basically. Between 40,000 and 400,000, you pay 15% tax, and over that, over 441,000, then you pay a 20% long-term capital gains tax. Now, outside of that, you actually have to pay regular income tax for all of your other gains. That includes dividends, premium that you get from options and stuff like that, winnings. That includes short-term capital gains. So you buy something today, you sell tomorrow or in a week or a month. So all that stuff is included into your regular ordinary income tax. Okay, these are the federal levels of income tax. You pay 10% for your up to $10,000, etc., up to all the way up to 37% of your income for the federal tax. But you also have state tax and you have FICA taxes. Okay, so there is a loophole here in real estate. By the way, if you sell, you don't get to pay capital gains for up to $250,000 or so. This is the California income tax. Okay, it goes from 1% for your first $10,000. It's progressive, just like the federal tax, which means that you pay 1% on your first $8,500 that you gain, and then you pay 2% for the next tranche of money that you, or bracket of money that you earn. From 8,000 to 20,000, you pay 2% of that, and then 4% of everything between 20,000 and 31,000, etc., all the way up to 13.3% in the state of California, sunny state of California. So basically, you can use this calculator here to try to figure out how much tax you're going to be paying. And let's say that I'm going to get, by liquidating this account, I have about $25,000 of winnings that I haven't paid tax on. So how do I figure that? Well, it takes your cost basis and then the price that I sell the asset at, and so the difference is my profit. So I have to put that profit towards my income. If you want to rewatch this video and slow it down, that's fine. But I take the profit that I take from my sales, from my dividends, from my trades, and then you subtract the cost basis from the actual final selling price, and that's your profit or loss. Okay, it's your P&L statement, right? So you add the P&L to your income. All right. You used to be able to, I think, subtract your losses from one category and apply it to others, but I think investments are kind of isolated from that. You can't do that anymore. So you take your P&L, and if you have a profit, then you add it onto your income tax. So let's say it's about $25,000, which is about right for my account at the moment. So if I liquidate the entire thing, that's what I would have to add onto my income. Now, if assuming I made $0 from any other avenue of work or whatever, then this would be my tax. Okay, I would be paying Marginal tax is 12%, so effective tax rate 5.37. Remember how it was in tranches? You gotta factor that in. Or that would be like $1,300. Then FICA tax is pretty expensive. 6.5% of that goes towards Social Security. The rest of it goes towards Medicare tax, so that would be almost $2,000 from that, and then $300 for state income tax. Total tax would be 14%, or 3,500. All right, and your total income on a $25,000 gain, your total after-tax income would be $21,424. All right, now let's say I made $25,000 from other sources. That would put me here. So let's say I Ubered or flipped burgers or something and made $25,000 in a year. This is what I'll be getting taxed. I'll be paying a 20% tax, or $9,730. So I'll be taking home $40,000 if I made 50. All right, so I made, let's say, 25,000 Ubering and 25,000 trading. All right, so let's take it up to the extreme. So you can see $10 million in California. We have 37% marginal tax rate for for the federal income tax. 36.6 is the effective rate, or that would be 3.6 million. Then we have the FICA. I'm actually not sure why it's so low for the millionaires. If anyone has an answer to that, you can tell me. But then you have 13.3% marginal tax rate, effective tax rate 13%, 1.3 million for state. Then local, you might be paying some local taxes as well, which puts you well over half of your money. Okay, 52.06%, or $5.2 million of tax you'd be paying on your trades and your dividends and whatnot, and your capital gains for that year. So you'd be taking home 4.8 million nearly from a $10,000 gain. Okay, so you pay half your money in taxes. All right, so, and then of course if you want to buy something, you got to pay sales tax, etc. All right, all these local taxes. Hopefully that clears things up for you guys. I know I went a little bit fast, but this is definitely my least favorite topic to talk about. I really don't like taxes. I do whatever I can to try to minimize them legally. And it's important to know about it, but it's not important to focus on it, okay? So I don't want to, you definitely want to make the right decisions with taxes in mind, but you have to put that a little bit on the back burner and try to make the decisions that are good for your, capital growth and whatnot. And you don't want to be only focusing on tax. At least that's my idea. That's the way I do it. None of this is financial advice, and this is, of course, for informational and entertainment purposes only. If you're confused about anything, contact your financial advisor, blah, blah, blah. Okay, so that's it for the video. I wanted to keep it very short and sweet. Maybe it wasn't sweet, but it's definitely short. All right, peace out.